Yo, what's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. In this video, we are going to be discussing how I manage my trades. All right, we're going to be discussing risk management, trade management, tips and tricks, things like that. All right, I'm going to basically walk you guys through my entire plan on how I do take advantage of trade management and things like that. So with that being said, let's get right into it. All right, so let's get into it. How do I manage my trade setups? Now, if you haven't seen the previous video, I don't know if I'm going to upload this video first or second, but if you haven't seen the video where I go through today's Telegram trades that were triggered, then feel free to go look at that one. So far, we are up on GBP USD 3.01%. We did take a minus 1% loss here. Okay, so then we can say 2.01% here, and then once this trade here hits our take profit, then that would be sitting around 7.01%, right? So not a bad week at all for GBP USD. Usually I don't trade GBP USD too much throughout the week, like 1 or 2 trades on average a week on GBP USD. This week we had 3 opportunities. Last week we only had 1 opportunity with a continuation of the week before, right? So how do I manage trades? Well, first you have to figure out when are you going to go risk-free. All right, that should be your first question. At what point are you going to go ahead and let's put that at 14? When are you going to close your exposure? Right? So what does this mean? This basically means when are you going to be risk-free? Okay. Now there are 2 ways to go risk-free. So this means risk-free. Right? So there are 2 ways. The first way is to, once you get to a certain point, okay, you can move your stop loss to break even. All right? The second way is once you get to a certain point, you can simply just close 1R of your trade, and that's it. Okay, closing 1R of your trade will be equivalent to closing the same amount that you're risking, right? So if you're up 1R, then that means that you are up 1% if you're risking 1%. If you're risking 2% and you're up 1R, that means that you're up 2%. So let's talk about pips now. If you're risking 10 pips on a trade, and you are up 10 pips on a trade, that means you are up 1R. That means you are positive the same amount that you are risking, okay? So when are you going to close exposure? Okay, when are you going to go risk-free? There are 2 ways. Move your stop loss to break even to go risk-free, or close 1R of your trade. Now, this is how I would recommend doing it, okay? All right, so these are 2 questions you have to ask yourself, okay? At what point am I going to go risk-free, and which risk-free method am I going to use? All right, those are 2 very, very valid questions. Now, what I do personally, which I will show you guys on the charts as well, is I like to go risk-free by closing 1R and leaving my stop loss where it is. Now, this depends on your trading style, okay? If you're trading a retail trading pattern and you are, let's say, scalping the market, or even if you're intraday trading the market with a retail trading pattern, I would suggest you go risk-free by moving your stop loss to break even, right? But if you are trading a style where every entry has a specific reason, every target has a specific reason, and every stop loss has a specific reason, then I would go the route of closing 1R of your trade. And I'm going to tell you guys why. So let's say you have a valid trade opportunity. Let's say you trade institutional style of trading, right? So those of you who do have access to my course, then you all know that I have a specific reason for everything. I have a specific reason for my stop loss, take profit, especially entry, right? So what I like to do is, because I have a specific reason for everything, I don't like to touch my stop loss, because my stop loss is always going to be at an invalidation zone. So what I do is, once my trade is up, let's cancel that. Okay, we'll just retype it out. Okay, so I like to go risk-free by closing 1R of my trade. Now the question is when. So I like to close 1R of my trade when I am up 4%, okay? Because I'm always going to be risking 1% on a trade. So whenever I'm up 1 to 4R, okay, whenever I'm up 4 times what I'm risking, that is when I will close 1R of my trade. Whenever I close 1R of my trade, that's going to mitigate a possible loss, right? So when I'm up 1 to 4, which usually takes place very, very quickly. So when you're up 4R, feel free to go ahead and close 1R of your trade, okay? And this is simply because, now, the reason why I don't move my stop loss is simply because my stop loss has a purpose, okay? And the purpose of that stop loss is my invalidation zone or area, right? So the stop loss has the purpose of invalidating the trade. Therefore, I don't necessarily want to move my stop loss to break even, right? Because price can still travel within the entire range itself. So what do I mean by this? Let's say I enter a buy position here. All right, let's say we have an order block. I enter a buy position here, right? And price pushes to the upside. Entry is going to be here, right? And we all know that this here would be my invalidation zone, right? Because then that would, if we're trading order blocks, of course, that would be a zone wipeout for this order block zone, okay? Which in this case is going to be pivot demand, right? So because of that, what I'm going to do is I'm going to leave my stop loss exactly where it is, right? But when I'm up 1 to 4 risk to reward, that's when I will close 1R of my trade, which basically closes the same amount that I'm risking here. Why don't I want to move my stop loss? Let's say price pushes to the upside, right? And I'll show you guys an example to possibly return back to our entry, okay, and play around within this area. Just because we consolidate within our stop loss zone, or let's say we consolidate at entry, it doesn't make the trade invalid, okay? It is still a valid trade setup until what? Until we close below our valid zone, our valid order block, so to speak, right? So what I like to do is I like to just mitigate risk by closing what I'm risking, closing 1R, and then I like to just allow price to do whatever it does, okay? If it hits take profit, fantastic. If it takes me out and I'm at break even, then so be it. Okay, so that's how I do it personally. So now let's actually go to a live example where this took place this week, actually. All right, I wanted to show you guys. So on this trade here, sent out to my Telegram channel, our invalidation zone would be this region here, right? If price closes below this region, then we are out of the trade, okay? No reason for us to be in the market at this point in time if price closes below, right? So our entry was here. All right, and we can see that price consolidates within this area just a little bit and then pushes to the upside, pushes to the upside, pushes to the upside. We come very, very close to hitting our take profit. But do you guys see how price returns back to our entry and then goes to hit our take profit within the next few hours? This is why you must manage your trade accordingly, okay? And how I do it is I will leave my stop loss where it's at, close 1R of the trade when I'm up 4%, and then allow price to literally do whatever it wants to do, right? And it's going to be important that you guys make sure that you understand your trading style, right? Are you setting your stop loss based off of an invalidation zone? Are you setting your stop loss just as buffer room? Are you setting your stop loss, you know, just below a certain low just because you think it'll be, you know, a good amount of space, right? Are you setting your stop loss based off of a certain amount of pips? You have to understand your trading style and your trading strategy in order to accurately figure out how to manage a trade. Right now, I know some people like to manage their stop losses below the previous low, and then if they get taken out, so be it. You can build consistency like this. Okay, you can absolutely build consistency with, you know, managing a trade like that, because sometimes, whereas in this case here, if we were managing the trade like that, right, we created this lower high here, okay, after we had created a previous lower low. Price then breaks that lower low, so you could have moved your stop loss here, right? Price returns, creates a new lower high, which is here, okay, pushes to the downside, taking out the previous lower low. You could have moved your stop loss to this point here, okay, and then you could just keep doing that, right? So let's say we break back to the downside, okay, then we can set the stop loss here. You can manage like that and still be consistent. In this case, it would have worked out in your favor, but it's not always going to work out in your favor. And that is why you must understand your exact trading strategy, your trading style, and why you're setting your targets where you're setting it, why you're setting your stops where you're setting it, why you're taking entries where you're taking them. All right. Now that's all explained within my course, but if you don't have access to my course, this should give you, certain things that you should possibly think about, right? And it really just boils down to, okay, so even in this case here, right, like if we wanted to manage this trade like that, a lot of people ask me, right, do I trail my stop losses, right? Especially because I'm risking, anywhere from 1.5 to like 3.5/5 pips around there, right? So really the only reason why I'm able to risk, as little as I do is simply because I understand my trading strategy. I understand my trading style, right? I understand that if I get a valid entry, price should react to that valid entry very, very aggressively and reject away from it, right? I understand that if I am, this entry was actually taken here, not necessarily here, but oh well. Oh, no, it was taken here. Yeah, because this was Asia session, London session, New York session. Yeah. Okay, so yeah, I thought my charts had moved or something like that. But no, we're good. Right? So you must understand your trading style, your trading plan, things like that. Normally, I'm not on GU as much as I am today on this session, on this YouTube video with you guys, but GU has been, GU has been pretty good recently. So on this trade here, the risk was around 9 pips, right? So if we trail this to here, okay, we were up around 8%, 8.74% within the first, for everyone within the Telegram channel. We were up around 8% within the first 6 hours of this trade running, right? Only risking 9 pips. So at this point, if you're someone who likes to manage their trade by moving their stop loss to break even, you would have gotten taken out here, right? And let's just see how much we were up, what percent we were up here. Okay, so we weren't up 4% just yet at this high, right? But if you were to manage your trade by moving your stop loss to break even instead of just closing 1R, then you would have been taken out of the trade here, right? Whereas everyone who is a part of my Telegram channel or who has my institutional trading course, right? If you guys manage the trades how I teach you all how to manage the trades and you simply just close 1R once you're up around 4R, which was somewhere around this area. All right, let's use this. Oh, a little lower, right? Right here. So once we hit this region here, we simply just close 1R of the trade, right? We simply just close the same amount that we're risking, which is simply just 1% of our account, all right? Because I only risk 1% of my account per trade, and that is exactly how we're able to produce 26% trades, right? But I really closed this at 16%. But who's counting, right? Because some of you guys did hold this, so congrats to you. Yeah, so that's basically how I manage my trades. That's how I manage active trades, that's how I manage my risk, things like that. So hopefully this video helps you out as it relates to trade management, as it relates to figuring out how to perfect the trade management, what you would like to do, things like that, right? Overall, you just have to make sure that you understand your trading style. With that being said, I'll catch you guys on the next video. Much love.